Before we jump into this episode, I want to invite you to join our community to help you become a better steward, scale to billions, and ultimately give more or all of it away. All I want you to do is to click the subscribe button right now. I love your support. It's incredible to see your comments, and we're just getting started. I can't wait to go on this journey with you. Thank you so much for subscribing. It means the world to me. Welcome to the Build It to Billions podcast, where we got successful entrepreneurs and investors on their journey from millions to billions. We believe the key to scaling and compounding your wealth and life starts every single day with a mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to help you scale and compound your wealth and life so you can give more all of it away to help MVPs. My name is Brett Swartz. On every episode, we are joined by some of the world's top entrepreneurs, millionaires or billionaires, and they share their secrets, wisdom, and insight with us so we can all level up and make a bigger impact. I'm excited about our next guest. He's out of the Indianapolis area, and he is a partner at Resolute RDM. It's a real estate firm specializing in commercial investment and property management. Over 17 years of experience, and he's a CPM, a certified property manager, and a CCIM candidate designation as well. He brings extensive expertise in income-producing assets, investment strategies, asset management, syndications, ground development. He's a real estate pro, is what we're talking about here. Please welcome to the show with me, Ryan Cadwell. Ryan, how are we doing?
Good, Brett. Thanks for having me. So excited to be here.
Absolutely. And for our listeners to get to know you for the first time, maybe just give us a little bit more about your story and your current focus, and then we'll dive into how to build some wealth in today's market with property management.
Sure. I grew up in the business. My dad owned some affordable apartments when I was younger. So just cut my teeth mowing grass, changing toilets, doing the stuff you got to do when you're a newbie, and grew that into a several hundred property portfolio, and then have just been leveling up ever since. Switched from did a couple hundred flips. Didn't necessarily like not being able to control all of that, so then got into ground up development, and then that's migrated into some of the bigger projects we're a part of now.
Excellent. Yeah, that's great. And so let's dive right into it. What is the number one thing you're seeing for maximizing property management in today's marketplace? I feel like there's lots of changes that are all kind of hitting at once, in a lot of ways. Of course, it depends what market you're in and what you're managing. But what are you seeing right now that your investors and or the owners that you work with most appreciate about what your firm is providing?
Sure. I mean, I think the main thing we provide much more of a proactive approach, proactive strategy as opposed to reactive. Anybody knows that reactive usually can cost you more money. The proactive approach has more to do with buying right, making sure you know what you want, why you want it, and then build a plan, and we execute the plan, as opposed to just flying by the seat of your shorts, and just trying to figure it out as you go. Let's build something together that's properly underwritten, with proper assumptions. Know where we got those assumptions from, and then execute as best you can with the things you can't control. But I mean, the main thing that a lot of the things we're getting brought into is just it totally depends on the asset class type. I mean, office here in Indianapolis, there's a lot of flight to quality, so your BC assets are going to have to be repositioned in a different way. Multifamily here, tons of delivery on new units, so that's creating downward pressure on your B and C quality units. Totally just depends on the asset type. It depends on when you bought it. Depends on if you've got any of those interest rate pressures, how leveraged you are, all those different kinds of things. So whenever we get involved with somebody, it's learn who they are, learn what they did, and build accordingly.
Yeah, I couldn't agree with you more, Ryan. And by the way, you can learn more about Ryan by finding him on LinkedIn. And Cadwell is spelled Cadwell. I feel like there's three things to every deal, and whether it be management, whether it be acquiring, whether it be exiting, and there's cash flow, which most people know, right? But there's also tax flow, and the third one is also debt flow. I think a lot of people got, maybe a little bit. So if you like this little short clip of the interview I just did, click over here to watch the full interview. And please don't forget to subscribe. Thanks so much, everybody.